Hi, we at ET Now caught up with the top management of TCS to understand the overall growth outlook post the Q4 results, and the management painted a fairly optimistic demand scenario and is fairly confident of achieving double-digit growth for FY22. In fact, the stock, of course, has come under pressure, down nearly around 4.5% in trade today, because the entire Nifty IT index has come under pressure, but the Q4 results were fairly good. And in line with estimates. Management stated that they believe there are two demand drivers, which is the technology and shift to cloud, which will provide demand visibility into the next few years, along with the investments that they have already made in the business. Traditional opportunities like outsourcing of large deals are at play, and TCS has mastered the same. The share of TCS continues to grow here. He also stated that there is an opportunity to participate in upstream work that customers are looking at, and they want to play the upstream opportunity, and if at all they really do play it well, it would mean opportunity for exponential growth for TCS. In terms of the cloud adoption, Mr. Gopinathan stated that cloud adoption is still at early stages. Large adopters are still below 30%, and large workload migration is yet to happen. It is still strategic commitments for most of the customers or organizations. They also do state that they're seeing broad-based growth across verticals, although we have seen very strong growth in the BFSI segment. Retail, CPG, as well as the manufacturing are yet to fully recover, but we did see a good sequential growth there. And they also stated that overall, in terms of the deal pipeline, it is a steady increase in North America in terms of the deal pipeline, and during this quarter itself, wherein it was the highest ever TCV in terms of the order bookings, the deal pipeline was a good balance of large deals as well as a number of small deals. Speaking about the growth, again, management stated that there is a high possibility of double-digit growth for TCS, and the management stays committed to achieve the same. And they also stated that they are fairly proud of achieving 4% growth, 4% plus growth for the last consecutive 3 quarters. There are pricing pressure in traditional opportunities, which is likely to continue, but on the newer services, the pricing power is there for players like TCS, at least in the medium term. Today, digital has become a hygiene, and digital will be the center and core of the solutions going ahead. And TCS also mentioned that they can deliver the 26 to 28% aspirational margin band, and also that the growth would be a fairly important lever for margins. Some margin levers, of course, would alter. Management also mentioned that utilization and leverage, along with the growth trajectory, of course, has helped them in terms of the margins, and they are fairly happy in terms of the margin resilience. In terms of the work from home, management stated that people will continue to work in the SBWS mode for a few more months until there is normalization, and they do not really see dramatic changes to the attrition level, although the attrition level may increase in the next few quarters. At TCS, attrition level was at an all-time low at 7.2%. 25 to 25 vision would be the operating model for the future. And also, management so far has been consistent that 80 to 100% of the free cash flow in a particular period would be distributed to shareholders, and that policy is likely to continue. Management also mentioned that they have seen 5 tech cycles. The tech cycle is only going to generate newer jobs, and it never means reduction of jobs, and that employee addition would continue for TCS, but for a different kind of work. So yes, TCS ended the quarter at a fairly optimistic note, and they are optimistic to achieve a double-digit growth in FY22.